Morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be considering the Euro USD in particular. I think the strength we are seeing in the dollar index is spilling over in Euro USD as well, and we have seen consolidation with a downward bias in the Euro USD. And in today's session, we will be considering the USDJPY as well, in which our bias is on the buy side. So you can even say that we are actually banking on the dollar strength. And in that context, euro is looking like it is losing steam, and it is going into a consolidation phase with a bearish bias. If you consider today's trading context, the equity segment in particular is showing some risk of mood, and we have seen most of the equity indices for the day, starting from the Asian trading session, are trading lower. And now, as the European trading session is underway, we are seeing major equity indices in Europe are showing losses of more than 1 percentage point. And if we consider the US equity indices futures, they are trading lower by almost 2 percentage points. So we are all set for a gap down open in the US trading session. And this is mainly because of the rising number of cases in both United States as well as China. We have got fresh rise in infections from some of the districts in Beijing, and also in United States. Many of the states which were earlier considering lower number of cases are now again showing the possibility of second wave, and that has got the market sentiments spooked, and we are seeing a fresh sell-off beginning. If we consider the data docket, we didn't really get many major releases for the day. Only in the morning session we got the data from China, and that is all we have got for major economies of the world. If you consider the China's retail sales number, there is a decline of 2.8% in terms of year on year, and this is even worse than the expectation. The expectation was of around 2% decline, as the China's economy is getting back on track, and the restrictions which were in place in the March and April were lifted to large extent in the May, but still the public confidence is not that high, and because of that the retail sales are lower compared to what they were in the May of 2019. And I think this momentum is likely to prevail for at least a couple of months till we see normalcy to at least some extent returning in the economy. And at the same time we got other figures as well. If you consider the unemployment rate, now it stands at 5.9%, and that better than the expectation was of a reading around 6.2%. And industrial production has also gone up, and now it is up by 4.4%. And the house price index is also showing some gains with the rise of around 4.9%. Now let's shift our attention to the technical segment. Here we will cover the Euro USD and the USD JPY. Let's start with the Euro USD's technical outlook first. This is the daily time frame chart, and as you can see, the Euro USD is struggling after getting close to its prior swing high. After consolidating closer to 1.14 for past couple of trading sessions, we are seeing accelerated sell-off in the Euro USD. In Friday's session, we saw the decline of more than 100 pips, and even in today's trading session, though there is not much momentum, we are still seeing bearish bias remaining intact, and we are not really seeing any significant momentum on the upside. And I think more or less it has entered into a retracement zone if we consider its rally starting from around 1.075 level to almost close to 1.14. So it was one hail of a ride on the upside, and of course if it enters into consolidation phase, and if we see sideways momentum prevailing for next couple of trading sessions, then that shouldn't really be surprising. Rather than that, we can expect it to slowly and steadily decline toward this 1.115 zone, which is also close to 38.2% Fibonacci retracement of its rally starting from around 1.1072 to 1.142. That's a movement of 700 pips, and then if this consolidation happens, then I think we will get a fresh opportunity for going long from the daily time frame perspective as well. But from short to medium term perspective, I think this is not the time to get involved on the long side unless and until we get a fresh break on the upside. So for the time being, my bias is to adopt a scalping kind of strategy and look for sell on rise opportunities here. If you consider the 4 hourly chart, here we have this sharp upside in a regression curve, and now the price action has moved to the lower band of this regression curve, and I think we will see to some extent this curve will flatten as we have the price action happening in the lower band. So because of that, this is not going to be maintainable for long enough time, and in a day or two's time we will see this regression curve flattening to large extent. But as you can see that we did get a break on the downside, but on the lower side we have seen this first resistance of this month's pivot point series is now acting as a support zone. So because of that, we can expect some consolidation to happen on this price area closer to 1.125, but I'm not really advising any large positioning on the long side. Rather than that, wait it out and see if you can get any fresh opportunities to go for short sale. And if the break happens, then as I said, we can expect the fall to extend towards even 1.115 area. So we have this possibility of almost more than 100 pips move on the downside, and it will be interesting to see when we will have the optimum risk reward ratio as well. For that, we will have to rely on the lower time frame chart of hourly here, and here we have this confluence of 50, 100 and 200 SMAs around 1.13 zone, and I think this is the area to watch out for. And unless and until there is a clear break above this crucial resistance zone, we can be hopeful of going in for a fresh short sale opportunities and thinking about shorting it again. For that, I think I would suggest that you watch out for these 50 SMA zone, and right now it is around 1.128. So there is a possibility of Euro USD again moving say 30-40 pips from current levels on the high side. But that if that comes true, and if that really happens, then I think that would be an awesome opportunity for us to double down on our positioning on the short sale side, and we can keep our stop loss anywhere above this prior swing high, which is there around 1.134. So that will cut down on our risk as well. For around a risk of 40 to 50 pips, we can expect almost more than 100 pips on the lower side, as if we are going in for a fresh short sale opportunity anywhere close to 1.13, we can target at the bare minimum the price zone of around 1.12, and of course that will give us a risk reward ratio which is going to be more than 1 is to 2, as our risk is going to be around 40 to 50 pips depending on where is your exact entry point. So here we can't take an exact entry point, but I think the price band of say around 1.129 to 1.131 will be an excellent positioning, excellent area to watch out for. And if that happens, if the price shows some upward momentum, and if then we see stabilization happening, then I think we can think about going in for a fresh short sell opportunity here. If you are not really inclined to wait it out, then of course you can even think about going in for a market sell trade. But then, as I said, the stop loss is likely to remain the same, and that is going to increase the amount of risk. And that is the reason why I feel that we should see if we can get a better opportunity for us to optimize the risk reward ratio as well. Moving on to USDJPY, the things are looking on the opposite side for the USDJPY. USDJPY has already seen sharp decline from the levels close to 110 to almost close to below 107, and now on the lower side it is getting some support, and we have seen it stabilizing for last two trading session. In Friday's trading session it even saw some buying momentum coming in and pushing it closer to 107.5, but in today's trading session we are not really seeing any substantial buying momentum, and rather it is consolidating closer to 107.40, and I think we can do think about going in for scalping kind of trades here. And of course, if you consider the momentum on the larger time frame, then I think the bias is likely to remain on the bearish side, and as we have seen this significant decline that is likely to prevail, and we will see again fresh selling momentum coming in as and when we will see due retracement and consolidation. So from the longer term perspective, my stance is bearish, but from short to medium term perspective, I think a chance can be taken to think about going long on the lower side as close to the 107 level as possible. And if we get lucky enough, or you can say if we get fortunate enough, we will indeed end up making good amount of money. And here it is struggling closer to the central pivot point of this month's pivot point series, and this is going to be a crucial marker for the USDJPY. Anything above it, this 107.3 reading, I think we can safely be on the long side of the trade, and as I said, we are going to utilize it as a marker. So if the price action is happening below this central pivot point, then I think we will have to adopt a cautious approach. Not really think about going for a fresh shorting, but still, even going long is going to be risky, and here we will mostly have to rely on the hourly setup to fine tune our strategy. So if we see some fresh momentum on the upside, and if the USD is able to clear its immediate swing high, which is there around 107.60, then I think we can see uptick around this 200 SMA level, which is there around 108. So a lot depends on how the USD behaves in next couple of hours. We have this start of United States trading session, and of course we will see heightened volatility and large price action in initial hours of trading session. So we will have a better understanding of how things are likely to evolve in the USD and as I said, on the lower side we can indeed adopt this zone of around its immediate swing low around 107 as a crucial stop loss, and I think any break below that 107 should be taken as a fresh sign that selling pressure is again coming back and likely to push the USD below its immediate swing low. So here adopt this scalping strategy with bullish bias if the USD is really able to sustain itself above this 100 SMA zone, and as I said, the central pivot point on the monthly time frame as well. And if we see a break on the downside, then I think we will have to simply sit on the sidelines, as I am not really confident that this is the right time to look for short selling opportunity, and rather than that, a cautious approach on the long side can be adopted, and we can expect the rally towards 108 zone happening in next couple of trading session. So with that, I am wrapping up the session. If any of you have any idea or any query to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. Have a fabulous day ahead. Make a lot of profit. See you tomorrow. Goodbye.